It shouldn't impact the stock this much, should it, Colin, to have a stock split? Or maybe yes, because of the whole moves into ETFs and index funds and potentially the Dow.
I'm not sure that's what it is. I think it implies a bullish stance from the company that things are going well, that they would consider this. The company's had a long history of trying to make the stock accessible to as wide a range of investors, including retail investors. And so this is in line with what we've seen them do in the past to try and make the stock more easily ownable for some smaller investors and really make that broad investor pool available to the company.
So you think it's just about the signal? Were there questions, though, about the fundamentals of the business? The stock's actually been on a roll lately.
We were in the Fremont factory last week with investors, and things were humming right along. I think there's some concerns around the Shanghai facility shutting down for a couple of days, and some supply chain issues, that are endemic to the entire auto industry. We're seeing them execute along a lot of that, in a very coherent and capable manner. But I think for us, looking at these guys, there's always expectations that get out of whack on the end of a quarter, so it can be kind of a mixed bag, but we think things are going awfully well there.
Suspending a Shanghai factory for what, I think 4 days until everyone can get tested, does that have a material impact?
It won't on the overall scheme of things, but in the short term, if they're reporting numbers at the end of the quarter here and you lose a few days of production, that can be pretty material in terms of what happens. And so that's something we're watching for, but it's something we also think they'll make up those volumes as they go out through the rest of the year.
So what do you do with the stock here, as it's had a remarkable comeback? It got hit and is still lower for the year, I think, but has had a really strong bounce back in the last few weeks.
We're still buyers on a couple of trends. One, EV demand is continuing to outstrip supply in a massive way, and we're seeing, dates for deliveries extend out as the volume of demand for Tesla is really extending past what they can supply. We're seeing the rest of their competition, particularly the startups, go through some teething on these ramps. It can be really hard to make these vehicles, and we've seen that with the traditional OEMs, and we're seeing production from some of their peers not keep up with the growth that's happening at Tesla. And the other thing that we keep highlighting is the volume of vehicles that they have on the road for their self-driving functionality. And one of the things that we're seeing them do is really leverage the volume of data and the number of cars that they have on the road to really evolve that functionality. And while we see it still being a big challenge left for not only them, but the rest of the industry, we think they have the critical element of that with all of those cars collecting information and collecting experiences that they can roll into the functionality over time. And we see them really outpacing the competition on that full self-driving functionality.
A buyer on the weakness. And my bad, it's actually up year to date now. With this rally, it takes it up 3% for the year. Colin Rusch. Colin, thank you.